We are back with yet another powerful trading strategy. This time, traders, you will not need to go from one time frame to the other. You will just stick to the 5-minute time frame and you will see the rules of this strategy. It is a very strong strategy for you to punish the market. So let's go ahead and begin with our video. And here we are, traders. These are the two examples that I'm gonna be showing. And right off the bat, we see that we don't really care about the overall price direction. We are looking again at the most recent leg. But let's go ahead and proceed and check out the rules step by step. Stick around until the end of the video in order for you to check out the specifics of this strategy and also to see our spectacular statistics in the trading signals, which I'm gonna be showing in the end of this video. Let's proceed now. As I said, we don't care about the overall trend with this strategy. It takes place only on the 1-minute time frame, and all you have to do is to identify some form of structure, of break of structure, and we will see again the specifics of the strategy. It takes place only on the 5-minute time frame, guys. Remember that. You don't need to change between different time frames. Example 1 is gonna be a bearish example. We are looking, as I said, for some break of structure. Okay, so here our break of structure happened exactly right here. Why did it happen here? Let's talk about those things as well, because many beginners are watching the videos. Because this low, you see the low of this week is lower than the candlestick, than the low of the candlestick to its right, and than the low of the candlestick to its left, including the wicks, guys. So this is a low. Since this got broken, we will identify this one as the break of structure. Okay. Now the break needs to happen impulsively only for one reason, which we're gonna check out right now. The reason for that is because we need to leave a fair value gap. Many people are asking me in the other videos, which fair value gap are we identifying, Chris, if there are, let's say, another fair value gap, 2-3 fair value gaps. Let's assume this is number 1, and let's assume that this candlestick does not exist here, and we have another FVG and another right here. There might be as many FVGs as the market wants, let's say, but we don't care about it. We will be highlighting the highest FVG in this occasion. The highest fair value gap is this fair value gap right here, created below the low, from the low of this first candlestick and from the high of this third candlestick. Excuse me, this should be 1, this is number 2, this is the third candlestick. So the low of the first candlestick, the high of the third, as we're gonna see in a bit. Now what I'm saying here, will we just be waiting for price to retrace into our FVG area and then we're gonna look for a trade? No, we will not scale to a lower time frame. We will not wait for any of that. You will see how we're gonna be entering. So, are we interested in this retracement? As in the old videos, as in other videos that I have shown, that we scaled down to a lower time frame and then we are looking for some form of pattern, let's say, and then we enter here, or whatever I have shown in plenty of videos. And of course those strategies work as well. This is a very different strategy for those of you who want to make it fully mechanical. Now, let's proceed. As I said, not at all, we will not be entering it like that. There are very different rules for this strategy. And as a matter of fact, as I say here, very important, this strategy will have very high reward to risk. Okay, so you might be activated less times and you might be having a little bit more of losses, but you will be hitting those very high rewards to risks. So even though we need the fair value gap to be present, at least a fair value gap, this is not the way we will be entering. How are we going to be entering? Again, guys, bear with me because I will say it again. I say it every single time. We have beginners also here and they need to know So they don't have to move from one video to another to see what an FVG is, what a low is, what a high is, and waste their time. So every single video is as if it is its own tutorial as well. Okay, so let's proceed here, and let's say again that the fair value gap is created from these three candlesticks: candlestick number 1, candlestick number 2, and candlestick number 3. The gap, you see this untested gap that is left below the low of candlestick number 1 and above the high of candlestick number 3, this is your fair value gap, this gap that we are leaving on candlestick number 2. Now again, a very important rule. We talked about the fair value gap. An FVG needs to be present. Number 2, this is the first rule. Number 2, there should be a wick, as you see, a wick below in this occasion of candlestick number 1. In the bullish example that we will show later on, in this video, it will be above candlestick number 1. So the wick also needs to be present below candlestick number 1, and you will see why. We have a wick, so we're good to go. Now, what we do? We go ahead and we place two lines, or we just go ahead and highlight the area, as I'm gonna show with the next slide, of the bottom of the body, okay, bottom of the body of candlestick number 1 and bottom of the wick, the lowest point of candlestick number 1, and we extend them all the way to the right. You will see why we are doing this thing. So of course, in your chart, all you need to do is just highlight this area and extend it all the way to the right. This is all you need to do. The area that is created from the bottom of candlestick number 1, of the body of candlestick number 1, and of the wick. There needs to be a wick, as we said. So if there is no wick, you do not apply this strategy. Now, right off the bat, we see a perfect reaction from this area that I have highlighted. But you will tell me this means nothing in a sense, because if you don't have certain rules regarding stop loss, then this is absolutely worthless. So, you might think that the stop loss is the one that you see, that we are just placing the stop loss above the area, and this would make a perfect video like other YouTubers make, a perfect fake video actually, where be saying you enter here and boom, 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 you hit a 40 to 1 instantly, and of course you're gonna be losing 20 trades in a row if you try to do that. There is no question about that. So we're not here to sell lies, we are here to show things that can work. And of course the best things that work are the things that we are teaching in the one-on-one. Certainly you can ask the other members, you can check out the reviews, actually all real reviews, you can interact with the members who wrote the reviews, and also the trading signals, for which I'm gonna be showing the results that we have had in the end of this video. Let's proceed. Now, this is the trick, the actual trick. Besides, okay, the entry rule, which is very important as well, the other trick is that the stop loss is going to be this zone right here multiplied by 3. So you increase it another 2 times. You had it, we had it right here, and you add another 2 times this. So it is a total of 3 times this thing. A total of 3 times this, or you add this another 2 times. You can do that as well. So here and here. Let's go ahead and see. It would make us this area. It would give us this area if you do this thing right here. So it is 3 times this area. 1, 2, 3, let's say. Okay, so instead of 6 ticks, this area again is a 6 tick area. This area right here, you do it times 3, which means 18 ticks stop loss in this occasion. It should be very clear until now. So let's proceed and check out how the trade looks. This is exactly how this trade would look if I check it out, if I zoom out, if you go ahead and target this most recent, let's say, area of liquidity that we find to the left, because remember this happened here, here you got activated, okay, you might claim that we can also hit this area, you would be correct for a 5-to-1 reward to risk. But if you want to target areas all the way to the left, because when this is gonna play for good, then you can hit this area for a 7.5-to-1 RR in this example, or even this area, and this went way lower actually, for a 15-to-1 RR. This went way lower, but of course it wouldn't be realistic just to guess because we know the future. So I'm just saying that you can target areas of liquidity. Or you can go ahead and target this one, of course, and close partials along the way, which is gonna be recommended instead of going for a 15-to-1 straight ahead, unless you know exactly what you are doing. Now guys, instantly after this example, we have the second example, and we are identifying again the most recent break of structure. And the most recent break of structure happens exactly after the break of this point. Why, Chris, the new people, the beginners might ask, why isn't the break of structure here, here, or here? Again, guys, because in this occasion, in this bullish example, this is a proper high. It is higher than the high of the candlestick to its right and than the high of the candlestick to its left. You extend that to the right. It is the most recent high. There is no other high over here or over here. So this is your most recent one that you will be working with. After it is broken, there are the same steps that you need to follow. Okay, we broke above our high. Do we have a fair value gap? We have, as a matter of fact, two fair value gaps, one over here and one over here. What did I say as a rule? Because you guys keep asking me about this rule. So I went ahead and included it in this video that I'm making, in this free video for YouTube. You identify the lowest fair value gap in this occasion that you want to buy. In the previous example that we wanted to short, we identified the highest fair value gap. Now in the previous example we only had one fair value gap, but if we would be having three fair value gaps, let's say this and this, still we would be identifying this, the number one, the highest. Now it is the lowest because we are willing to buy. We broke above a high, not below a low. Hopefully this is clear. Now, this is the first candlestick from the ones that created the FVG. This is the second one and this is the third one. Why? On the first candlestick, we have, look at the high of the first candlestick, look at the low of the third candlestick, and look at this area, this gap that is being created on the second candlestick. A fair value gap again needs three candlesticks in order to be created. It should be pretty simple. Until now, I'm just repeating the same things on every single video for beginners. Okay, so here the bottom of 3 and the top of 1 create this beautiful fair value gap. We need the fair value gap to be present. This doesn't mean that we are entering from the fair value gap, if you recall. Okay, so what are we doing? We need to have a wick. Again, candlestick number 1 should be having a wick above. If you recall in the previous example, we were demanding to see a wick below because we were willing to, this is a very bad drawing, we were willing to short and we identified this wick. Now we are willing to buy, so we are identifying this wick right here. There is a wick above candlestick number 1. So we proceed with identifying it. Top of the wick, we identify the top in this occasion of the body of candlestick number 1 and the top of the overall top, which is the top of the wick of candlestick number 1. We extend this area to the right. So the existence of an FVG is a prerequisite, but we will not be entering from the FVG at all. In other words, if you check it out, we need to see the FVG being penetrated. with this strategy. The way you're gonna do it, again, you're gonna be highlighting your area. Of course, you don't need to place horizontal lines, and you can just extend it towards the right. Okay. And by the way, guys, again, those videos take a lot of time. Those presentations, they might seem, now that I'm making this video and I'm presenting it to you, it might seem like an easy job, but this whole thing, in order to make it clear for you and make the graphs, create the graphs in PowerPoint, takes a lot of time. This is why I'm uploading only once per 2 weeks most of the time. So do me the favor and subscribe to the YouTube channel, leave me a like, share this video with all of your friends and family, and of course check out my exceptional trading services. Let's proceed. There we go. You extend this area to the right. Now, again, are we gonna just taking this, I'm laughing, this small stop loss such as the one that you see right here? Again, this would be a very good marketing trick, but this will not work most of the times in real life. What did we say? We do the area times 3. So our area was only 2.75 points. Do it times 4 and you get the ticks. Okay. So now this area is gonna be times 3. Multiply this thing by 3 and you get 8.25 points, okay, which is 33 ticks, as we see right here, times 4. Okay, so this is the stop loss. This is a mechanical strategy. Very nice. Now you can go ahead and target, as we said, this high right here, which is the most recent in this occasion point of liquidity. This would give you a full 6-to-1 reward to risk. Or, of course, you can go ahead and target higher. As a matter of fact, in order to show you that this strategy it plays out like crazy when it plays out, this one, of course, you wouldn't know that, and I would never target a 40-to-1. Let's make that clear. Not at all. I'm targeting a fixed 1.3-to-1 in my trades that I'm taking in the trading signals. So I'm just making this clear. This is just for you to see. I'm never going for those high rewards to risks. If you wanna go for them, but this is the reality that I'm not going for them. I just want to show you that when this one plays out, then it goes within the same day. You would have hit a 40-to-1, and then it went for even more actually. Okay. So guys, that was it. Our precious strategy. Here I do have our results in the past 41 trades. Of course, the video was made a little bit earlier. I think by the time that you are seeing this video, we will be having another 3 days, 2 or 3 days. So we were in a small losing streak, we can call it here, still at the 76% winning percentage. We don't know if the rest ones are gonna be greens, so that we will go above 80%, or if we will stay to the close to the 70%. This is pretty transparent. If you ask for it, I'm gonna send it to you. I have no issue with that at all. And if you want to join us, go ahead. You will find the links down in the description or in the comment section. But if you want to learn how to trade besides this one strategy, and trust me, all of the members that I have done the one-on-one are amazed by what I'm showing them, and they have found profitability, okay, especially with the latest strategies that I'm teaching. Then go ahead and book your one-on-one mentoring, or go ahead and enroll in the Precious Academy, where I also have the strategies there. Again, subscribe to my YouTube channel, like the video, share it with your friends, with your family, as we have said plenty of times. This is gonna do it for today, traders, and thank you all for watching. Until next time.